The Bombay Stock Exchange in Mumbai, there was a fair bit of pandemonium this morning when the markets hit the lower circuit. You saw the Sensex and Nifty both hitting lower circuit. But at the moment, you're seeing the Sensex having recovered almost flat, close to about 0.4%. At the moment, Nifty as well, close to up about 0.5%. It was indeed panic selling that we saw on the bourses this morning when the stock hit lower circuit. As far as the traders are concerned, are you seeing some sort of palpable, conspicuous panic on the street, or is it that they realize this is just a knee-jerk reaction on the back of the global headwinds being negative, given the fact that we are seeing the CAC, DAX, FTSE, NASDAQ, S&P and all the other American indices as well trading in the negative?
Well, you can say that the traders are still wary of the entire situation because coronavirus has been something which has been given some of the other kind of news which has led to markets reacting negatively. So even today, the day is still on and there can be any other news which can directly affect the market. We'll ask one of the investors. You can't really be sure of the market.
Hold on for a second. Apologies about interruption. Rahul Arora, CEO of Nirmal Bang Securities, is now joining us live for a very latest on this. Rahul, would you say this was a absolute knee-jerk reaction that we saw in the markets this morning when the Sensex and Nifty hit lower circuit this morning? Trading was halted. Would you call this panic selling and the right time, in fact, as far as the valuations are concerned, to enter the market?
So, Chetty, I think if you looked at the U.S. markets overnight and what the U.S. Fed tried to do with the huge liquidity injunction program over there, the Dow Jones, which was actually down 2,200 points, actually recovered all the way to a negative 1,200, but then it closed down again 2,000 points or thereabouts. And I think before our markets opened today, the SGX Nifty was anyway indicating a downtick of about 700-800 points. So to that extent, I don't think I'm entirely surprised at the fact that the market did hit a lower circuit. To your question on whether this is panic, I think it probably is, but then, we're living in some very volatile, uncertain and complicated and very ambiguous times. So I think to put a particular number on where the index will stabilize is a bit tough. If you followed the market action today, we were circuit down and the Nifty was actually up in the green by about 100 points and within a couple of minutes down again about 200-300 points, and now again it's in the green. So I think for an investor to even try and take a position for trading or investing today is almost suicidal. I think it's best to probably stay on the sidelines, wait for the volatility to stabilize, get some concrete evidence that a market bottom has been made. You can probably buy the market 5% higher, but I think nobody knows whether today's lower circuit, which we hit on opening, is indeed the bottom, because the economic impact of coronavirus is still something that is not quantifiable and probably won't be for some time to come.
And what is the sense that you're picking up in the week to come as well, since the volatility index, as we see, is also quite high up there, and the global markets also have tanked. In fact, all the indicators, whether it's from Europe or from the US, were looking negative. Even Asian markets were trading in the red. So as far as the week to come, you reckon that this would go down lower, or would you think the markets would hold for to these levels?
So, Chetty, I think if you look at it purely from a fundamental basis, there are a few things that are going right for India right now from an economic standpoint. I think the biggest boon has been that oil has dropped down to about 30. Now, the kind of savings that we're talking about, and this depends on where oil eventually stabilizes, the savings could be anywhere between $20 to $50 billion for us. And that's huge. That's straight cash to the Indian government, and that improves our finances tremendously. You're sitting on forex reserves of nearly $500 billion. You've seen how proactively the RBI has intervened in the currency market over the last couple of days to prevent a sharp depreciation of the rupee. And then, with crude falling off the way it has, I think the inflation numbers, which came in at 6.5% yesterday, are going to trend down dramatically over the next 2 or 3 readings that we're going to get, which essentially means it opens up some policy space for the Reserve Bank of India. So I think from an economic standpoint, even though we were going through a quasi-recessionary phase any which ways before COVID or this crude crisis or Yes Bank hit us, I think there has been a blessing in disguise from an economic standpoint. And I think if investors want to enter the market keeping a 2 to 3 year view in mind, then I think it's best not to time it. You can probably look at start to buying today. If your stock price falls down by 5-10% even after you've bought it, don't sweat, because the returns you will make, I think, from a 3 year perspective Chetty, just to put this in context, I think the last time you got such a mouth-watering opportunity in the Indian equity markets was as far back as 2008. You probably go through a lifetime. Most people like you and me will probably see 2 or 3 or 4 days like this in our lifetime. And I think it's at times like these where you need to think rationally as opposed to give in to panic and start building your portfolio. So I would actually recommend just keeping a slight brave heart, going out there and start buying, because I think there are few economic data points that are turning positive, and I think foreign investors will latch on to that the minute things start stabilizing globally.
So that also means that there is unnecessary panic at the moment. And what is interesting to note, and correct me if I'm wrong there, Rahul, is as far as the Indian benchmark indices is concerned, the drop has been less than proportionate than the international market. So it's safe to say that we have done way better than the international markets, despite the COVID-19 fears that have gripped the world and the world indices as well. As far as the recovery is concerned, to be able to come back on track to the levels that we were at, how long do you reckon it's going to take?
So, Chetty, I don't think this is going to be a year where we're going to even flirt with the all-time highs that we have seen of 12,500 on the Nifty. I think the damage has been so pronounced on the way down, hitting 8,500 today. I think that, if we are able to, if everything stabilizes, you are ceteris paribus from here on. We go into a good monsoon season, and my sense is, you could potentially, even from here for the rest of the year, make 20% on the headline index, which probably means you get back to something like, a 10,500 kind of a Nifty, maybe 11,000 if you're lucky. But, Chetty, also keep in mind that there is another huge event that's taking place at the back end of the year, which is the U.S. election. And from an equity market standpoint, people are going to watch that very closely on how Trump's campaign pans out. So, my sense is if you enter today, you probably are looking at a 15-20% kind of index return, which means stocks could return you in multiples of that, because I think valuations have come down to fairly reasonable levels, even if you factor in the economic impact of coronavirus. But I just want to reiterate for the benefit of your viewers, Chetty, I don't think there is any merit or logic in timing the bottom or the top. I think, prices are reasonable. Go out there. There's no harm in being brave now. Had we had this conversation a couple of days back, I would have probably said, don't be brave. But I think there's not much to lose. I think, Chetty, this rally essentially started at 4,400.
That's true.
4,400 on the Nifty. It went all the way up to about 12,400, and you're down about 50% from there to nearly 8,400. So your bet of going right from here is far more than it was. Your bet on going right today is probably far more than it was a couple of days back. So
absolutely.
I think there's no harm in getting your feet wet a little bit in the markets and start building your portfolio.
Oh, thank you so much, Rahul, for allaying those fears as far as the Indian markets are concerned. Appreciate you joining us on this broadcast. Rajiv Dubey is also on the phone line joining us. Rajiv, at the moment, as we see the Sensex and Nifty, you see down by about 0.5%, flirting in the range of being flat. Sensex at 32,634 at the moment, Nifty at 9,536 at the moment. And as Rahul was also putting it, it's just panic selling at the moment that we're seeing, and this is unnecessary fear gripping the markets at the moment, and there is not much to worry about, because we will still end up seeing the fair level of recovery if one just waits in the silos and dips their feet once in a while.
So, Chetty, I don't quite agree with that theory, because there is only one factor that is deciding the market right now, and that is the coronavirus. And we do not know where that is headed. So you cannot predict either way. And this breather that we are going to get over the weekend, there are only two factors that will decide how the market opens on Monday and how it reacts to right through the day today. And those two factors are how far coronavirus spreads in India and other parts of the world, and two, how clueless or in control are governments around the world to be able to control that. So I think those are the only two factors that will decide which way the market is going to head. And I do not think we have seen the end of it yet. I think there is still the coronavirus still spreading. More and more countries are getting impacted. More and more cities are getting impacted. More and more people are getting impacted. So I do not quite agree entirely with that theory.
So near term, you're saying that there would be still panic that will grip the indices across the world, benchmark indices across the world. But in the long run, let's wait and watch to see what really happens. All depends on how the governments tackle this pandemic of coronavirus. Thanks much, Rajiv, for joining us. There's breaking news coming in at the moment.
Hello everyone, this is Rahul Kamal here. Hope you enjoyed this video. For the latest news and analysis, like and subscribe the India Today YouTube channel and don't forget to press the bell icon to stay updated.